Hello, I'm Angeline Ong, and welcome to IG's Trading the Markets. With me today, all the way from Japan, is Masaki Taketsume, Fund Manager of the Schroder Japan Trust. Thank you so much for joining us. It's a real pleasure to see you in the flesh. The Nikkei has been going great guns, still near record highs. With your overview and that special position as the Fund Manager of Schroder Japan Trust, can it continue? All those with IG on trackers, looking at the Nikkei, and of course Japanese equities are wondering, how long can this last?
So I think that there are two structural tailwinds for the Japanese equity market. One is inflation, another one is corporate governance improvement. Inflation finally coming back in Japan after the 30 years of the deflation, and the inflation is a positive for the corporate earnings because now Japanese company can use the pricing power to improve their profitability. So inflation is one driver, and the corporate governance improvement, it's a structural changes in a Japanese company. So it structurally helps to improve the return on equity for the Japanese company, and in turn that helps the valuation for the Japanese equity market. So there are two structural tailwinds. One is the inflation, helping the earnings. Another one is the corporate governance that helps in the valuation. So given the two strong tailwinds, we think that the current Japan equity rally in the Japanese equity market as a sustainable one.
Now, at the same time, dividends and the payouts and share buybacks are at record highs. Is this likely to continue, and for how long as well for those invested in this space? That's the question.
Yes. So Japanese company has been increasing dividend and the shareholder share buyback at the record high level, even this year. But seeing the Japanese company balance sheet, still more than 40% of the Japanese company has a net excess cash on the balance sheet. So in other words, there still remains a lot of the powder to further improve the dividend or share buyback. So I think that with the background of the corporate governance improvement, we continue to see the improvement in dividend payout as well as the share buyback from the Japanese corporation.
What are we talking about, Masaki? We're talking 12 months, another 18 months of the good times still rolling on for this sort of scenario, this sort of Goldilocks scenario for Japanese stocks?
Yeah, so in terms of inflation, we finally have inflation back to Japan from the 2022. So it's still just 3 years after the 30 years of the deflation. In terms of corporate governance, so it officially started in 2014. But since then, ROE, return on equity of the Japanese corporation, has improved towards 8%. But given the average ROE of the other part of the world, like US and Europe, it's well over the 10%. I think there is a good chance to Japanese company to further improve the return on equity for the multiple years. So in that sense, we think that we current good environment in the Japanese equity market to sustain for another few more years at least. Yeah.
And at the same time, you talk about this return of inflation after 3 decades. Do we see this leading to monetary policy tightening soon? Should we expect more from the Bank of Japan?
So we rather call it as a normalization of the monetary policy. So Bank of Japan has been taking the unusual monetary policy like a negative interest rate or quantitative easing. So with the 2 or 3% inflation rate, which we are currently seeing for the Japanese economy, that is exactly the target level of the Bank of Japan. So which suggests that the Bank of Japan in a process to normalize the monetary policy from negative interest rate policy to the 0 or maybe 50 basis point or 100 basis point of the policy rate. So it's not the policy tightening, we should say, like England or US. It's more like a normalization of the monetary policy. So in that sense, this movement by Bank of Japan may not have a much of a negative impact on the Japanese equity market.
And at the same time, let's touch on the yen because our clients here love trading the yen. In fact, it's always one of the top 3 crosses. Of course, with election year, we've got cable at number 1 at the moment, and we've got euro dollar as well because of what's happening in France. But the yen recently plunged to a 38-year low, and there's all this talk about intervention. What do you think is the likely trajectory for the yen?
Yeah, so that's a $1,000,000 question.
Yes.
So nobody can make an accurate forecast about the exchange rate, but for the last couple years, movement of the yen rate is highly correlated with the difference in the interest rate between against Japan, against the US or Europe or UK. And as we talked, Bank of Japan in a process to normalize the monetary policy, increasing the interest rate, whereas the other part of the country, US or UK, in a stage to easing the monetary policy, cutting the interest rate. So in that sense, interest rate difference between Japan and the other part of the country may narrow, which may suggest that the appreciation of the yen rate going forward, and especially given the fact that the Japanese authority, government or Bank of Japan, seems to be uncomfortable to see that the yen to depreciate from the current level.
And given all this, what does this mean for your portfolio strategy? Talk us through sort of the key things that you look out for and how you're sort of strategized for this coming second half.
Yeah. So from the sector viewpoint, we tend to like more domestic-oriented sector, like services or retail. And in terms of market cap, we like the mid to small cap over the large cap because the inflation is coming back in Japan. It's a domestic economic, it's a tailwind for the domestic businesses. So in that sense, domestic-oriented sector like retail and service will be able to have more pricing power on the back of the inflation. And in terms of mid to small cap space, mid to small cap has been underperforming the overall market for the last 2 or 3 years. Now valuation comes to the more attractive level compared to the large cap, and the mid to small cap stock has a more domestic exposure, so which suggests that the mid to small cap has a more tailwind for their earnings outlook from the revival of the Japanese economy. Yeah.
How about your tech plays? I see here that there were some sharp price declines. Is this due to just sectoral performance, or is there a bigger sort of story behind it, given that tech and AI have done very well since October?
Yeah. So our sense here that the recent correction of the tech-related stock is more of the valuation. So valuation moved up the too high level to be sustainable, and on the back of the increase in the interest rate, we might see some valuation adjustment for some of the technology stock. Yeah.
And finally, we have plenty of our clients looking at sort of singular stocks to play and to take a position on, whether it's long or short. And part of the reason for this, Masaki, is because many are concerned now that the AI exuberance has gone on for way too long and it's time to take profits off the table. We get asked very often by many of the clients that talk to our trading desk, what are the plays that are more sort of sustainable to reinvest this money? The question I put to all my guests is, which sectors, which particular stocks are you sort of interested in if you were to hedge your bets and take some of that risk off the table?
In the case of the Japanese equity market, we think financial sector looks more interesting because of the two things. First, so we finally have an interest rate. So for the last 30 years, we don't have any interest rate in Japan because of the deflation. But finally, we have a positive interest rate in Japan. So that naturally helped to rebuild the domestic business or domestic earnings for the financial institution. So in addition to that, recent improvement in corporate governance accelerate the dissolving the cross-shareholder ownership among the Japanese corporation. So even for the financial institution is aggressively selling their cross-shareholding stock. So that release a lot of the capital out of the financial institution balance sheet and used for the either improvement in a shareholder remuneration or investing in a real business for the growth. So what's happening in Japan, inflation and the corporate governance may also work as a tailwind for the financial institution in Japan, which is somewhat independent from the what's happening outside of the Japan.
Right. Schroder's Japan Trust has also announced an enhanced dividend policy. Can you tell us a bit more about that?
Yeah, this is a strong commitment by our board to narrow the discount of the share price against the net asset value of the fund. So we now decide to pay out the 4% as a dividend for the Schroder Japan Trust, which creates a quite attractive yield for any investor. So, and in terms of that impact on my portfolio management, this policy change does not have any impact on my investment management.
Talking to us at IG, Masaki Taketsume is, of course, the fund manager of Schroder Japan Trust. Thank you for listening.